Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it's Wednesday. The Fed made its move, and it does look like the rates are going to be up by 0.5%. That's the raise in the rates. That was, we were kind of expecting that. Nothing really unusual. The market was up prior to the announcement, and then after the announcement, it pulled back. Interestingly enough, Tesla stock fell 2.6% to 156.80. And that's interesting because it's down 12.4% for the week. So it's really kind of continuing its slide. Currently, it's at about its 2-year low. I shorted the stocks very shortly, very shortly, yesterday, and I closed the short before the announcement. It was down a little bit, but not very much. I did open up another short on Amazon. We'll see how that one does. And I do have a short that's set to trigger on Apple if it makes a move. If it makes a move, so we'll kind of see what's happening. What's going to happen with that. Here's the numbers. S&P 500 down basically 0.78%. Not that much, but it is off that critical 4,000 level. That it does seem to have some resistance at 4,000. Also, the Dow Jones Industrial Average, excuse me, that was down as well. NASDAQ was down. S&P volume was down, and the NASDAQ volume was down. So all across the board, we were down in terms of, we're just down all across the board. Now, that may change as we come into the, that may change coming up here. But for right now, we're down. Just want to show you kind of what I'm doing, how I'm playing it. I've got just one stock long, and that's kind of like the broken record. But stock I have long is BP, and that, as you can see, was down for the day too. So not the greatest. There, it was up yesterday, but it is down today, and that's the stock that I have. The stock that I have short is, let's go over there, and that's the only one I have short right now is Amazon. And I did short that. It's down a little bit, so I'm making a little bit of money as it goes lower. But the volume, not that much on the volume there. So we're not seeing a whole lot of volume on that as well. So really, the only things too that I have currently is I have one full position in BP, and then I have a short on Amazon, and I'm looking to short Apple. Depends on how it trades tomorrow on the open, but I have I'm looking to short Apple tomorrow at about the 144.50 level. We'll see what happens there. We'll see if that makes any sense tomorrow. But kind of what's going on here. Let's take a look at this. This is an interesting slide that I have up. I don't know if you can see this on TikTok, so I'm going to try to run over there. This is GE. This is the stock of the day. Very interesting. This is the stock of the day. Now, I was not aware of this, but I think this is something that might want to put on your radar screen. It looks like GE is going to be split into 3 companies. It's going to be GE Aviation, of course. That's going to be mainly for the jet engines. GE Healthcare, of course, that's going to cover most of their healthcare division, which is quite large actually, and then GE Vernova. And I don't quite know what Vernova is doing, but it's going to be split into 3 companies. So, and by the way, GE did have a reverse split. That's one of the reasons why it's trading currently at 81.47. So you might want to put that on your radar screen. It's an interesting. It's an interesting thing that might happen here, because spinoffs tend to be, even in bad markets, spinoffs can be good. Can be good. I mean, they really can be. Just wanted to bring your attention also to the ready list that's available, of course, and that's available on the address here. I'm going to show it to everybody on TikTok. There we go. So hopefully you can see this address on TikTok. It's sinfox.com/LP/1JVP6. So kind of not exactly the world's easiest information to get there, but hopefully you can see it there. I'm going to put this right on the TikTok screen. So this will give you kind of an idea of, for the ready list. The ready list is great because it has stuff that's ready to start popping off. So that's a good thing to go for there as well. And I also have the heat map, and that is also available as well. We talked about that a little bit yesterday, but that's also here. So I just wanted to bring that to everybody's attention. And yeah, so let's get into some of the questions here from YouTube. All right. So thank you for that. Thank you for Sarah. Thank you so much. This is Array. Wants to look at Array. Array moved up tremendously today. I kind of want to look at it too. Looking good technically, but the market, yeah, that's the thing about this market. You're absolutely right about the way, a way it's looking. I mean, normally, I would be all over this, but in this market, this market has not been very forgiving. So let's look at Array first, ARRY. And that definitely moved up strongly today. It's a nice looking stock, but the question here is, is it worthwhile? Oh, I got there. For some reason that that went up there. Interesting. Array. Basically, Array. Let's see if I can flick to add to the stream there, and then let's go over here, show the whole thing. So basically, what's going on here, Sarah, is Array definitely gapped up. As you can see, that's a blue dot there. That shows, at least from my software, that indeed it was not only up on volume, and that's key, and it's very much up on volume, as you can see, but very much up and right up to the pivot 2350. So in a normal market, I would say, that's a really good thing. But here's what I would do on this one, Sarah. I would wait for it to pull back. This is a sort of a handle here. I don't know if you can see it. Let's see if we can go. Let's see if I can go to let's see if I can go to the chart here, so everyone can see it. There we go. All right, so I'm moving over here to the chart. Let's go. Excuse me. So with Array, basically it made this move here, but what I think you got to do is you got to draw this trend line here. Now, why did I draw that? Well, we're coming up with a cup here, and then it's pulled back to the 21-day line, and then it exploded off that 200-day line. But here's the thing. I would wait. I do believe it's very unlikely that it's going to break through resistance at 23.69 tomorrow. So I would wait for a pullback to this line, but this is definitely something that you could buy. So alternatively, if it moves above 23.69 right here, then I would probably be a buyer of it. If not, I would wait for a pullback to this line. Now, again, this is so tricky because in this market it's just been so weak. I mean, normally I would buy this, but you're absolutely right about feeling a little bit skittish on this. So 2305. If it pulled back to 2305 and then reverse, I'd buy it there, or I'd buy it at the pivot, which currently is. Let's see. Let's take a look at that pivot here. The pivot on it is 2350. Okay, that's the pivot on it. And on the technicals, we're basically, see, this is what I'm concerned about buying this right now. It's what they call extended. And the reason it's extended is because if you look at the 21-day line, that's the line that I like to really key off of. We don't want to buy above or below that more than 5%. Unfortunately, right now, the stock is 12.72% above that 21-day line. So that means it's extended. So it's likely, it's very, very likely tomorrow it's going to pull back. So here's the thing. Unless I just would wait for a pullback to the 21-day line, get it within 5% of that 21-day line. Now, the 21-day line on this stock is um, is 2060 2089. I want to just kind of show everybody what stock I'm talking about here. This is Array Technologies, ARRY. So I don't recommend buying this one until it pulls back. Okay, so I don't recommend buying Array Technologies. It's set up well, but I don't recommend buying it. I recommend waiting for a pullback to about 5% of this line. So ideally, if it pulled back to 2089, that's where you would buy it. But I think you're going to buy it a little bit higher than that, maybe 21. But that's the maximum. So I would be super careful doing this because again, this is one of those markets where it's just looking like it's going to be difficult to buy the breakout. So I wouldn't buy. I don't in this market I don't like to buy breakouts. I want to buy pullbacks, and the pullback that I'm looking to is to the 21-day line. So that's kind of what I'm looking at. Now, what do I mean by the 21-day line? Well, the 21-day line is the exponential moving average for 21 days. So it tends to be a little bit more it tends to be a little bit more volatile than just the straight averages like the 10-day moving average and the 200-day moving average. So hopefully that makes some sense. Let's go over to TAN. This is one of the solar stocks. Actually, this is an ETF that covers the solar area, and that's just been doing very, very well. I can't figure out exactly why. I think it's this anticipation that there's going to be some more tax credits before the end of the year because, of course, the Democrats in Congress are going to be in the minority in the next term, so they're going to be kind of passing, kind of sweetheart deals. And one of the sweetheart deals, of course, has been for the solar industry. And of course, the solar industry is totally supported by tax credits. So the more tax credits, this is one of the reasons I do think, that this has moved stronger. So let's kind of look and kind of see what's going on with this solar stock here, Invesco Solar, and this, of course, is an ETF. And let's kind of look at let's look at the technicals here. 21-day line. So it's within 5% of the 21-day line. So that is definitely kind of where you want to start looking at it. It's below the buy point. The buy point here on TAN is 84.18. We're coming up to that. We're not quite there yet. So we've got a cup with handle. Again, we've got the same situation that we have, and this is why, in this kind of market, you want to try to buy it on the reversal. So I'm going to draw that reversal line right there. Now, what is that? Well, we've come out of this cup. We've pulled down into the handle, and now we've moved up from the handle. But really, where you want to buy it is you want to buy it as it's pulling back to that 21-day line. And currently, that 21-day line for TAN is right here at 79.89. So 79.89. We're a little bit above that at 82.65. So here's the thing. I think you just have to have patience, and patience is such a hard virtue. You just want to be doing things. I know that I do. I mean, I couldn't stand it. I was like almost all cash coming into this announcement by the Fed, and then I pulled the trigger, and I did afterwards. I shorted Amazon, thinking that with higher interest rates, it's going to be more difficult for people to buy, especially buying on credit, because of course that will affect the credit card rate. So that's one of the reasons I did short Amazon. But who knows? I mean, who knows what's the deal here? All right, let's. I'm gonna skip over here, Sarah, just for a second, get to somebody else's question, and then maybe come back. Here we go. Short Ford Motors. Well, here's the problem with shorting Ford. I think you have a good idea there, but the problem I see with shorting Ford is there's just not a lot left. There's not a lot of meat on the bone. I think you're better off shorting Tesla because there's so much more. There's so much more meat on the bone. So let's take a look at that Ford chart to see kind of what's going on in terms of is it shortable or not? And that's a really tough thing. I probably wouldn't be shorting Ford. Part of the reason is with Ford. We're just looking at a relatively low price stock. I mean, it's a $13 stock. Now it was up after hours, And it's true. The downward trend is lower, but we're talking about it moving very, very lightly. So there's just not a lot of meat left on that bone. And so that's the thing. I don't think it's a good candidate to short because it just hasn't been that significant. Now, currently, it's it's about 50% off of its all-time high. You want to short something that's only about maybe 20 to 30% off of its all-time high. Currently, Ford is 47.9% off of its 21-day high. So not really a good short, I don't think. Even though it does look like it's setting up with what they call a head and shoulders pattern. This is, of course, the head that I put there. This is the left shoulder, and this is the right shoulder. So it is a good shorting pattern. It has come up to the 200-day moving average. So that is a good shorting pattern. We wanted to see this kind of pattern then as it comes up. So it is not a bad pattern, but I just probably would not be a short here just because there's not a left on the bone here. I'd be more interested in possibly shorting a Tesla. Let's take a look at that one. It is a similar amount since the you know it is a similar amount off. It's 61% off of its 52-week high, which is an awful lot. But this is a much more expensive stock, and so I do think that it doesn't have quite a head with shoulders pattern here, but it is been rallying. There we go. It has been rallying up to the 21. It was rallying up to the 21-day line. I probably I wouldn't be a short here just because it's in the wrong phase. Let's go back to the daily chart. But this is one I would consider if I was shorting in the automotive. This is one that I would consider shorting. Now, another one that is in the automotive area that I do think is shortable is Penske, PEN, and that is not PEN. It's Penske, PSK, I think it is. I'm sorry, PSK. Is that right? No, I'm sorry. Let me get it. It's Penske. Just looking up PAG. I'm sorry. It's PAG on Penske Automotive for for that. So let's look at Penske just real quick as a potential short. PAG, Penske Automotive Group. There we go. Okay, there we go. Why do I think Penske is a good short? Well, let's take a look at it. I'm going to go over here to the weekly chart first. I'm going to see how much off the all-time, the 24-week, the 52-week high that it is. It's only 6% off the. It's only 6% off of the 52-week high. Okay, so it's held up. Typically, the ones you want to short are in the late stages where they're still pretty close to their highs, but they're starting to make a move lower. Now I know this is a 91 relative strength, but it's, as you can see, the relative strength has been flat here for a few months. What's happening is that we have these bases, but they're starting to fail. So base here, and then another base, and then we have a lower base. So what I think is likely to happen is there's likely to be a failure. So let's go over here to the daily chart to see where we could short this thing. This is PAG, Penske Automotive Group. I think that automotives are going to be weak in the next year. Why? Because higher interest rates are going to make it more difficult to sell new cars, also to sell used cars for that matter. If you'll notice, this was up. This rallied right before, and then it's off. So I do think we're going to see. I think we're going to get a reversal at the 21-day line. That's where I think it's going to happen. I don't think this is going to just. I don't think this is just going to go back up. I think it's going to come up the 21-day line. I think it's going to stop, and I think it's going to go lower. That's my guess. Right now, we're almost exactly at the 21-day line. We're at 0.26 off the 21-day line. This is where I think it's going to fail, just because I do think it's going to fail. at the 21-day line, and I think it's likely to go lower, even though with this interest rate hike. But we'll see. I would short this if I were going to short this, and I don't know. I haven't made a decision on this one. But if I were going to short this, I would short this right above the 21-day line, probably the 10-day line at about 124.60. That's where I would short it if it came up to that. So the way you do that is you put in a limit order. You put in a short limit order, and if it comes up to that, then it shorts down. So this is one I would look at possibly for a short. It's PAG, Penske Automotive Group. And the reason for this is because it's been a top performer, but we're in a situation in the market now where the top performers are going to start to move lower, especially ones that are very interest rate sensitive. And I do believe that's the case with stocks like Penske. So that's my that's my 2 cents in there. Okay, let's take a look at the next one from Mr. Malley. Hey Jim, thoughts on space long term? What do you think about the company? Well, I did make some good money a little over a year and a half ago uh, with Virgin Galactic, but I don't think I think that it's going to have some trouble personally. But let's look at the chart. I just don't see it right now in the. I just don't see it right now as a potential. It's moved down. It's in penny stock territory. It's $4.60 a share. Not something I'd like to be. It was down and then it was up after hours. I just don't like this one. I don't like it right now. You remember, everything is conditional. I love this stock back in the 2020s. I was trading this as it moved up, but once it hits its peak and it's off its peak, I don't like to trade a stock long. Uh, you know, if it's not within about 15% of its all-time high, and space Virgin Galactic is 70% off of its all-time high. So I just can't really get excited about this one. Even as a short, there just isn't a lot of runway there. So I'm looking at stocks that have been performing well that may go lower. Now I did make some exceptions, of course, with Amazon because Amazon is such a large cap tech stock. I just think that a lot of these large cap techs are going to be in trouble. Let's look at Apple. This is the one that I am looking to short as well. I did fairly well with shorting this one this week, but I'm taking a very cautious attitude on it. This one has traded up a little bit. This is Apple we're looking at here, and it was up today 143.20, and now it's 143.38. So I do think this is going higher. I want to see it really move. Where I'm looking to possibly short it is right here at about 148. That's where I'm looking to short it because I do think that we're going to get a bounce and then possibly up to there. But I do think it's going lower. I'm looking at the 10-minute chart here on this. So that's what I'm looking at. Let's see if we could put I don't put these up and up. There we go. I'm looking at the 10-minute chart. This is for Apple, and this is where I'm probably going to short it tomorrow. We'll see. Again, I have a lemon order in on it, so we'll just see what happens. But right now, I think space long term. I think you want to get out of it until it starts moving higher. It's 70% off of its all-time high. So you think you got to be super careful there. So I probably would not be doing. I wouldn't be doing it myself. All right, let's look at ASC for Charles. Thank you. Always like your comments, Charles. ASC, and thanks for tuning in. I really appreciate it, of course. Please tell your friends. Please subscribe. I need more viewers. Thank you. This is Ardmore Shipping. And I haven't been in this one yet, but the shipping companies have been doing quite well. Based on what's going on, the shipping companies have been doing, very well in this environment. So, who's for me to say? But I don't know. I don't know if I would. I'm not as excited about it. Let's see how close to the 21-day line it is. All right. Okay. It's within 3%, so that's good. There isn't really any pattern though. That's the problem. I'm looking for a base pattern. There just isn't really a base pattern. It hasn't based out yet. So let's look at the pattern rec here. Yeah, it's the last pattern was a cup formation at $5.13. That was the buy point on it, and we're 174 days, so it really hasn't formed a base yet. So I would be careful with this one just because I want to see it form a base and then buy it in the traditional way out of the base. Now, one of the good things about this stock is it's relatively close on the checklist. If we look at it, it's within 15% of its all-time high. I definitely like buying stocks long within 15% of that all-time high. Why? Because it just interestingly enough, that typically is where the juice is. So that's why I do like that. So I'm kind of on the fence on this one. I probably would not be a buyer on this one, just because I'm kind of more. I'm my game plan, at least for now, has been moving more towards the short side of the market. Now I know that's a little bit bad. You're not supposed to short stocks, but I just think we're going lower. Overall now we are still in an uptrend in this market, but oh man, I just don't think so. I think we're going lower. So I'm looking to short, but not to go long. All right. Hello, Lynn. Any thoughts on DUK and AII? Let's look at DUK first. See if I can give a good analysis of this. Blake, Duke Energy. Well, this is sort of a safety stock. I mean, Duke Energy, one of the biggest electrical providers in the world. I'm not really good at trading utilities, I'll be honest with you, but in this kind of market, utility is probably one of your better areas of the market. Now, here's something that I want to show you on this chart. It definitely had a death cross there. That's where the 50-day moves below the 200-day. That shows weakness, but we're coming up above that 200-day line. So you know, this is not my style of investing because there's nothing new about Duke Energy. It's not innovative in any way, but I think that people are going to be paying their electric bills. So I think that they have in a downturn. I think they have good cash flow. I really do. And if we come above the 200-day line, I'm actually somewhat tempted. It's got a 56 checklist, which is not very good. I mean, I want to see a 67 or better, but it's not horrible. It's not horrible. Let's look at the technicals. This is the one that this very interesting. We're still, we're only, you know, well, we are a little bit high. We're now 3.9% above the 21-day. That's pretty good. That's not a bad place to buy it. But I just kind of want to see it move through that 200-day line. So here's the thing: if it moves above about 104.80, then we're up above the 200-day moving average. That's where I would buy it. But I'd hold on here. It's had 1, 2, 3 up days in a row, and I suspect that it's gonna move lower. But it's an interesting stock. I would watch this as one. I probably wouldn't take any action on this one right now. I just wouldn't, based on what I'm seeing. Based on what I'm seeing here. All right, let's take a look at. Oh, good question from Charles. He wants to look at the difference between Sun Run Run. Okay, so that's a solar stock, and Array. Now, Array did very, very well today. So let's see if I can bring that up for everybody here. Let's see if I can bring that up for everyone here. I'm going to go over here to Run. All right. And ARRY. Here we go. Right. Hopefully that gives us a look. See. All right. So now I'm going to try to show you that. So here's the comparison between here's the comparison between the two stocks. Hopefully you can see this. This is kind of tough. Sometimes it chooses the wrong color here. The green color here is Array Technologies, and it's done much better than Sun Run Run. That's Run here. See, that's the black line here. So basically in the last 2 quarters, that's all I've really put in here. I'm going to kind of show you that. I just put in 2 quarters because that's really, only 6 months. If you look at a year, sometimes it's a little bit off. But in the last quarter, if we started with $1 2 quarters ago, Array would have far exceeded Sun Run Run. As a matter of fact, if we're looking at that, since July 1st, Array is basically up. It's at 112, so you would have made 12 cents on that one. Or if you invested in well, it's Duke, you would have lost a little bit. I put the wrong ones in there, so I should have had Sun Run Run and Array. That's not correct. So let's look at that. Okay, no, that's not Duke. I want to put in Run here. And ARRY. No, it's not letting me. For some reason, it's not letting me. So let's do ARRY. I gave you the wrong comparison. There we go. Array Technologies. Sometimes my software. There we go. ARRY and Sun Run Run. Let's run. Right. So now we're hopefully showing it, and now we can see it. Now it's correct. Sorry about that. Sometimes I don't get like the software correct. Since July, we're looking at Array basically being up pretty well, 35 cents. That's pretty excellent, actually. If you look at that here, Sun Run is off about 8%. So interesting. Very similar trace here, as you can see. Very similar chart pattern, but it does look like Array is far out. It's far. It's performing much better than Run. So let's see why that is. I don't know why that is, but let me just look quickly to see if I can. All right, let's go back and let's look at Array. Yeah, there we go. There's Array. All right, with Array, this is interesting. So this is definitely outperforming, no question, Sun Run, and it has come up to this buy point. Yeah, I think you just have to be a little bit careful. I think I would wait for a pullback. This has definitely moved above the reversal line. I've drawn the reversal line there, so you can see it. There we go. Yeah, there's the reversal line. So it's definitely moving in an upward trend. Below this line, of course, it's actually in a downward trend. Above this line, it's an upward trend, and that's this handle here. So if you were to choose between 2 of them, you got to choose Array. That one's just the better one all the way around. So thanks a lot for that, Charles. Appreciate that. That's a good stock. All right, AAON. Let's see if I can pull AAON up. Manufacturers, heating and ventilation. See, this is not an area that I'm that familiar with, but it's definitely a good chart. I mean, it's definitely a good chart. So let's put the chart up for everybody. There we go. So here's the chart for AAON. As you can see, it's come right up into a buy zone, and that's always interesting. I'm looking at the daily chart here. There's a 81.20 buy point on this one. Currently, it's at 79.77 in the after hours trading, so it's right below that buy point. Of course, buy points are resistance, and if they move above buy points, that's why they're called buy points, because if it moves above the buy point, that means that there's less resistance for it to go higher, but there definitely is resistance at the buy point. Now, the question is, how far above the 21-day line is it? Well, it's very close. It's 2.93% above that 21-day line. Now, why is that concern? Why is that critical? Because that is a squeeze, and when it moves up, there's a very good likelihood that it will get enough. It'll get enough volume to move through. Let's look at the volume here. You notice that the last 2 days have been up volume, and they've been above that the average. By the way, this is a logarithmic scale here, and not a linear scale. So in this scale, anything above that red line is a lot of volume. So this had a lot of volume in the last 2 days, and it's above the 21-day line, below the buy point at 81.20. So yeah, I would say this one looks pretty good. I Let me just see. It's got a 100% checklist. Yeah, I think this is good. I think this is viable. It's not an area that I know a lot about, Matt, but it looks very, very good. I mean, this list looks very, very good. So I'm going to put this down in my kind of my little cheat sheet here. AAON. But yeah, this is looking very good. It's got some nice volume. It's below the buy point. It's close to the 21-day line, and it's in an upward trend. Now, I don't know if the rates will affect that this much. This is really not a hugely exciting category, but it's in the home heating area, and it's number 16 out of 197. So people are probably not going to buy new. They're going to definitely have Train has been good. This is, for some reason, I don't understand why this is, but for some reason this heating and air conditioning area, like Train Technologies, is up too. So let me look at this compared to Train Technologies. I want to look at this. Why? Because that is the area of the market that, for some reason this is moving up, and I don't know why. I just know that it is. Yeah, okay, so that's Train. So this is actually um, looks like a better chart than Train. So let me push it over to. Oh, let's get it over to the correct. I'm gonna put this up here. This is Train Technologies um, versus AAON. And it does appear that AAON, now this is on a yearly chart. Let's see if we can go. I don't like to see a year. I want to see 6 months on this one. So that's why I'm changing this chart to show 6 months. But it does look like this AAON was underperforming Train, but then in this recent last few days, it has been increasing its movement. This is a good area of the market. Look at this. 135, 145. This is since the 7th of, I mean, since the beginning of July. So this has been a strong area of the market. Thanks for showing this, Matt. But I definitely think in both these two, Train has an advantage, of course, over this one only because of its size. But I want to check the chart on Train um, to kind of see, because this heating and air conditioning area seems to be fairly good. I want to check Train, and I want to check Carrier. That's the spinoff from United Technologies. This is Train here. Yeah, Train also is right below. This is real interesting. Train is also right below the is also right below the buy point as well. That's very interesting. I don't know why there's so much strength in this area of the market. It just makes sense, but again, who knows? It seems like heating and air conditioning may be the new place that people are putting their money down, because this is a strong chart. I mean, 180, 180, 62. Now, of course, this is underperformed AAON, but I definitely like this chart. And if we look at yeah, this is a very, very good 89% checklist. Now, in this kind of market, I tend to favor lower liquid, larger issues. That's sort of been where I'm been looking. I want to take a quick look at Carrier, CARR. This was a spinoff again of United Technologies. And it has a very also a similar pattern, but it doesn't have a base form, so not as good. This one looks like it's making a turn here, but again, I want to look at three stocks together. Let's compare them, and let's look first all at uh, Train Technologies. Uh, let's see, Carrier and AAON. Right. All right, there we go. And I'm going to put it back to July. And let's see. So in the air conditioning area, here's kind of what we've got. We've got Carrier, which is the laggard. Okay, this is the former, this is probably the largest of these three companies in terms of its size. Uh, but it's also up significantly since the since the first of the since July. It's up 20%, which is fairly impressive, considering the market has been awful. Train Technology is up 35%, and this one AAON is up, is up 45%. So this is a very interesting area, the AC area, and it does appear, um, that the AC area is one of the areas that is making some really, really good progress. So thank you very much for this. I definitely think you could buy AAON, but I would also look at Train Technologies as well. Carrier, you probably can't buy because it's really not in a good formation for that. But I would look at buying AAON if it pulls back to that 21-day line. That would be a good place, and also look at Train because I think it's a bigger stock with a little bit less risk in terms of a pullback. But it's a very good area. It's a very, very good area. All right, let's see. Give us a rundown on the bond market. Well, I don't know if I can give you a good rundown on the bond market, but I can show you. I can show you uh, what kind of what there's an ETF that kind of tracks this. Let's look at the TVT and see kind of what's going on there. Did I get that right? Okay. No. TBT. Okay. And so that one did. All right. So let's go and look at the TBT. All right. With the TBT, what we're looking at, this is the inverse of the bond market. So as the bond rates go higher, this typically will go higher. So it has been coming down. It does look like we got a bounce on it. So um, it's really tough on the bond market. But I do think that with this higher interest rates, I do think that of course bonds will be worth less. I mean that's just what I think because that's the old thing. So I do see the bonds moving lower, the 10-year, with this rate hike, but it was expected, so it's kind of all been baked in here. So that's kind of my uh, that's kind of my my 2 cents. You're absolutely right. I'm sorry, I charted the wrong thing with array. I did. Hopefully, I fixed that problem. I fixed that problem. But you're absolutely right on that. I didn't look at tan and I didn't look at array, but let's look at tan and array once again. Sorry about that. Sometimes I get too excited and I chart the wrong thing. Um, let's look at tan and array. Oh, Invesco Solar. That's the ETF. And put array in there. There we go. So that should be that should be better. There we go. Sorry about that, Charles. I apologize. This is array and this is tan. As you can see, both have done well. The tan is actually probably the lower risk option because it's the ETF. But array has been it's been a spectacular performer. I think that the reason is because the expectation that there's probably there may be before the end of the year, there may be some kind of solar tax credit, which would definitely benefit them. All right, one last question. Any thoughts on NVIDIA? I think NVIDIA is, it may be turning the corner, but I still think it's a short. Um, let's take a look at it here. NVIDIA. There we go. All right. So let me pull up the NVIDIA chart. There we go. So NVIDIA, it's making a move above the 200-day. I definitely like that. I definitely like that. But here's the problem when we get to NVIDIA. NVIDIA, if we look at the weekly chart here, NVIDIA is a full 43% below its all-time high. That's 52-week high. But it looks like it has started to make this reversal. Now, I'm showing you the weekly chart here, not the daily chart. So it does look like it's made a reversal. The question is, can it, is it enough to sustain it? Well, possibly. I mean, I don't necessarily like buying stocks this far off the floor, but it was up significantly today, $6 is it this week. It's been up. So I do like the company a lot. But the question is, can it overcome some of these things? And what worries me is that the last quarter on sales, it was down 17%, and it was off 50% in terms of profit. So I am a little bit shaky on this one. I probably would not be a buyer until it could just show some more strength, because I mean, we could go through another. Of course, we've got some time, because the earnings, the next report, or the next earnings report, isn't until 2/22. So we possibly could nibble here. Again, this one's tough. It does have an improving relative strength line, but I want to look at the checklist on this one. It just isn't a good checklist. I would avoid this for long. I would avoid this as a long, and I probably wouldn't be a short on it either, because I do think that if we get some resistance at this line, this thing could move lower, and it could move lower very, very quickly. But right now, I just think you just can't do anything with it. Unfortunately, I can't. I just think you can't do anything with it. It's just too difficult. It's too difficult in this particular situation. So here's what. Thank you very much, everybody, for taking a look today. So appreciate it. Of course, I would really appreciate, of course, if you would be kind enough to like the show. That really helps us out. Gets us out there to a lot more people. I need to get out to a lot more people on the show, and maybe do some other things. But smash that like button. Smash that like button. That super helps us, and it gets us out there to a lot more people. Also, if you can, please, 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 please subscribe to the show. I wish you appreciate you doing that. By the way, if you're watching on TikTok, you could jump on over to YouTube easily. We have and I'm just pointing it up here. If you go to our link on my bio page, click on Beacons, and you can sign up for the free Action Trade Alerts. Plus, we also have the heat map. We have a lot of stuff on there right now that's available that you can sign up for. So I will be back tomorrow at 5 o'clock. Thank you much thank you for tuning in. Tell your friends if they're interested in stock, or even if they're not, about the show. Please, appreciate that. And until 5 tomorrow, happy trading, everybody.